Did you know that you do not need a complex strategy for you to become consistently profitable in the market? With simple, straightforward system, you can actually become a very successful trader. In this episode, I want to show you the way you can do that, whether you are a beginner trader or an advanced trader. Trust me, this strategy is going to end your years of struggle in the market if you follow the rules strictly. The rules are simple enough, even for a rookie to be able to understand. Number one, you will want to determine the structure of the market in a very simple way. How do you determine that? All you need to do is to find on your chart when price is making an impulse, correction, impulse. Once you can find that impulse, correction, impulse, and in this case, you will be using it on the 1H time frame. You can actually use it on any other time frame, but if you want a high probability scenario, then you need to use it on the 1H time frame. You are going to take the trade based on the 1H time frame. You will find all the rules on the 1H time frame and then take your trade from there. Now, first thing, impulse, correction, impulse. Now, in a bullish structure, when price is trying to retrace, that is, I'm talking about impulse, correction, impulse, and then you now have another correction that is about to happen. If you find this 3 candle pattern right about here, you will need to take your trade going lower. Now, I'm going to tell you what qualifies this 3 candle pattern for you to take trade going lower. But before I do that, I want to tell you that this is a counter trend. Remember, we are bullish, and right here you just want to take advantage to take price lower because this is a correction phase. In that correction phase, you can actually take a trade. Okay, so this strategy helps you to take trade on both the correction and the impulse phase. Now, let me tell you the rules of this 3 candle pattern that you need to find if you are going to be taking a counter trend trade in a bullish structure. The same thing applies to a bearish structure. Everything I'm telling you about this bullish structure, you just invert it, and then you have exact same thing when we're talking about the bearish structure. So what are the rules to determine the viability of this 3 candle pattern? Because if you go on your chart, I can assure you that you will find this kind of 3 candle patterns everywhere on your chart. But you want to filter out the ones that are not highly probable. You want to stick only to the high probability scenario. I'm talking about in terms of this 3 candle pattern. Number 1 rule is that the second candle, remember this is candle number 1, candle number 2, and candle number 3. You want to wait for the second candle, which will print the highest high, to take out the high of the previous 1H candle with a candle wick, not with a candle closure. Very, very important for you to understand that. That's the first rule. The second rule is that the number 3 candle has to close below the low of the middle candle that swept the liquidity, just like so. Now, number 3 rule is that this third candle also has to close below the opening of this first candle, which is a bullish candle. These are the 3 important rules that must happen before you pull the trigger. Otherwise, you'll be exposing your capital to risk. Okay? So once you find these three rules present here on this candle, this three candle formation, then you can go short from there. How do you go short? Well, you just pick your entry tool, and at the open of this middle candle, okay, at the open, you place your pending order right there, and then your stop loss just above the high of that middle candle. Give a buffer to your stop loss, and because we are trading a counter trend trade, so we want to go for simple 1 to 2. Now, how about trading in line with the direction of the trend? Simple, the same steps that you are going to take, the same steps. Remember, when price is doing impulse, correction, impulse, and then another correction, at the end of the correction, the way you will know that that correction is ended is if you find these three candle formation. The same exact rules that I told you about here is what you're going to apply here. You'll find the first candle printed. Now the second candle, which is the middle candle, has to take out this first 1H candle's low. And it has to be with a candle sweep, not with a candle closure. If it is with a candle closure, it's low probability. And then the third candle has to close above this middle candle's high, just like so. And also it has to close above the opening of the first candle. These are the three rules. Once it meets the three rules, then you can take your trade. You take your trade from here, and your stop loss just below here. Okay? And then here you target 1 to 3. Why is it? It is because we are trading in line with the overall structure of the market on the 1H time frame. But on the counter trend trade, you take 2R. Don't take my words for it. Okay? And don't dismiss this video that it doesn't work. Just go back and back test on as many pairs as possible. And then you will realize that what I'm telling you is a no-brainer. So let me take you to the chart now and show you some examples. Okay, so this is the first example that I want to show you just right here. But first of all, you have to determine the structure of the market in a very simple way. And I've told you need the 1, 2, 3 pattern. That's impulse, correction, impulse. So if we are taking it from here, you'll find out that we have an impulse, correction, and impulse. Your impulse can even get to this point because of this gap here. Okay? So you now have the 1, 2, 3 pattern in place. And you have something like this here, and it goes higher again. Simple structures in the market. Okay? So now you can determine that we are bullish in this instance. And so if we are bullish, I'm telling you that you can take a counter trend trade here. All right? When price is making a correction again. How do you do that? Now you have to follow the rules of the 3 candle pattern. One more thing before we continue. This candle, this first candle, has to have a good body size. You don't want to see a doji candle here. You want to see a good body size. Okay? And now that is candle number 1. Now candle number 2 has to take out the eye of candle number 1. I'm being slow so that you can understand every bit of what I'm saying. Just like so, it has to take it out with a candle wick, not with a candle closure. The next rule is that this third candle, it has to close below the low of candle number 2. The third rule is that this third candle has to close below the opening of candle number 1. All right? Once you find that these 3 rules are present here, then you can take the trade with this candle. Okay? Target 1 to 2. And as you can see, this is 1 to 2 here. Simple. Why are we taking 1 to 2? Because this is a counter trend trade. And now price goes higher again. Now you may look at this kind of thing and say, why did I not mark this? Because this candle that swept this previous candle's high is a doji candle. I said you need a full-size body candle, just like you find here, this candle number 1. So this is not valid. You have to be very careful on the 3 candle pattern that you are choosing. You need to follow the rules, because otherwise you are going to lose a lot of money, because you see these 3 candle patterns formed everywhere on your chart. Not all of them are high probability. And that's why we put rules in place. Now, let's look for another example. Look, this is example number 2. Remember, we are still bullish. And here we have candle number 1, candle number 2, and candle number 3. The rules have to be met. The first rule is that this middle candle that produces the highest high has to take out the high of the previous 1H candle with a candle wick, not with a candle closure. That's the first rule. Second rule, the number 3 candle has to close below the low of the middle candle, just like so. And now the third rule is that this number 3 candle has to close below the opening of this previous candle, which is a bullish candle. And as you can see, that happened there. So the 3 rules are complete. Now, again, remember, this first candle has to be a good body-sized candle before you can use it. And as you can see, all the conditions are met there, and therefore you can place your buy order here and go for 1 to 2. Why? Because it is a counter trend trade. All right? Now, after that, look at what has happened here. I told you that when you see, for you to determine the bias of the market, the structure on the 1H time frame, you need impulse, correction, impulse. Now, from here, you'll find out that we have this impulse and a correction here and another impulse here. How do you know this will be an impulse for you to be able to take your trade going lower? Is that, look at this candle. This candle closed below all of these lows here. It closed below. That tells you that this is a bearish scenario. It's no more bullish scenario. Okay? Very simple. Now, so because it's bearish, you want to start taking our trade going short. And if you are trading in the direction of the trend, then you can actually take 1 to 3 or even more, because you are trading in direction of the trend. So we go back to our rules. This is candle number 1, candle number 2, and candle number 3. Now, candle number 1 has to be taken out by candle number 2. And it has to be a sweep, not a candle closure. That's the first rule, met there. Second rule is that this number 3 candle has to close below the low of number 2 candle. And that is done. Rule 2 met. Rule 3, this number 3 candle has to close below the opening of this bullish candle. And as you can see, all the 3 rules are met there. Okay? So that's why we took the trade from here. And we target 1 to 3 or more. Why? Because it is in the direction of the trend. So simple. Now, let me make this a bit... okay? So now you may say, well, how about this? Look at it carefully, guys. Is this actually a pullback? Okay? Look at this candle's low and this candle's high. So we don't trade that. Now you may say, how about this one? Now, this took out this candle's high, but did this candle, look at this candle took out this previous candle's high. Now, the third candle did not close below the low of this middle candle, so we can't take the trade. Our rules must be in place. Okay, we filter out the bad trades. Now, let's continue and let me show you some more examples. Go back on your chart and backtest, guys. Just go back. Don't take my words for it. Just go back and backtest on your chart, and then you'll be amazed. Okay, let's see. Okay, so another example here. Look at this. Remember, we are what? We are still bearish. Look at it. We are still bearish. Let me show that to you so you can understand. See, we are still bearish. 1, 2, 3. We are still bearish. Before you start thinking that we are now bullish, no, we are still bearish. So, and therefore, look at this again. Just take a look at this. First candle, second candle, and the third candle. Let me even be pushing this thing to the side so you can see exactly what we are talking about. Okay, look at it. First candle, second candle, third candle. Now our rules. The first rule is that the first candle has to be taken out with the candle wick, and as you can see, it happened there. Second rule is that the number 3 candle has to take out the low of candle number 2, and that happened there. Sorry. So that happened there. And rule number 3 is that third candle has to take out, has to close below the low, the opening of candle number 1, which is a bullish candle in this day. And so it met all the rules. Now, the final rule is that this number 1 candle has to be with a good body size. Very important. That's very, very key. And that is why we took the trade right here, okay, on this candle, and target 1 to 3 or more. This is another example. We are still bearish. Look at this. This is candle number 1, candle number 2, and candle number 3. Our rules. Candle number 1 must be taken out with a candle wick of the candle number 2. Look at it. Candle number 2 swept the high of candle number 1. Now, second rule is that candle number 3 has to close below the low of the middle candle. And right here, you find it close below. And now the third rule is that candle number 3 has to also close below the opening of this candle number 1, which is a bullish candle. And as you can see, that happened there. So with those 3 in place, and remember, this candle has a good body size, this candle number 1. And with that, we enter our trade 1 to 3 or more, because we are trading in the direction of the trend. Simple. Now, let me see whether we have one more example. Go back and backtest, guys. This is another example. Now, what happened here? Is this bullish or bearish? Well, look at this. Determine the structure first of all. From this low, impulse, correction, impulse. No, impulse. Okay? And now, this is an uptrend. So, if you take your trade on top like this, when it's pulling back again, it's a counter trend trade. And I said you can trade on both sides. So, this is a counter trend trade. Okay? Now, let's see whether it meets the conditions. I said rule number 1, this candle, the middle candle has to take out the high of the previous one each candle with a candle wick not with a candle closure. Correct? Now, in this case, I said rule number 2 is that candle number 3 has to take out the low of candle number 1. Correct? Now, the third rule is that candle number 3 must also close below the opening of candle number 1. Correct? Now, let me ask you a question. If you understood what I've been telling you from the beginning. Now, this first candle, does it meet our rules? This first candle. The 3 rules are met, but there is one thing missing. Go to the comment section and tell me what is missing to make this very setup a high probability setup. Go to the comment section. I want to hear your comment. Do you think this is a valid setup, or do you think something is wrong here? Okay, so now let me tell you that this setup is invalid. Why? Take a look at this candle number 1. I said candle number 1 has to be with a good body candle size. Okay? A good candle body size. All right? As you can see, look at the body. Look at the percentage of the body compared to the percentage of the wick. This is not the red candle I'm talking about. So with this, it disqualifies this setup. This is not a high probability setup. You may think that price has returned to it and has dropped and has given you 1 to 2. But in practice, if you continue this way, trust me, you are going to blow your account. All right? Follow the rules. Strictly follow the rules. Now, I want you to understand something, to take note of something here. Let's look at the number of trades we got here. 1, 2. Let's see. This is 3, 4, and 5. So 5 trades within how many weeks? This is on the 6th of October. And we did it till the 1st of November. Okay? Less than 1 month. We have 5 solid trades on just 1 pair. Think about it, guys. Think about it. Well, this is where we're going to drop the anchor. If you enjoyed the video, you can give us a like. Please do give us your like so that the algorithm will help to push this video out to more people or traders that want to find simple strategy that they can use in the market to make money for themselves. And if you haven't joined our free Telegram channel, it's completely free. Please do so. And if you are yet to become part of our family by hitting the subscribe button, do that immediately. What are you waiting for? And then turn on the notification so that anytime we upload a new video, you'll be notified about it. All right, guys. If you want to take your trading to the next level, you can join our VIP community. Doors are open for you. Thanks for watching, guys. I see you in our next episode.